Hey there, hello my friends, welcome back to Divergence Trader channel. Today we are diving into something super cool but often intimidating. The Elliott Wave Theory. Don't worry if it sounds complex, I'm here to break it down in a fun and easy way, like chatting with a friend over coffee. By the end of this video you'll have a solid grasp of what Elliott waves are and how they work. Let's jump in. So I minimize myself here and let's, okay, I think this is good. And we don't need the charts at the moment. I just need a blank space to draw some lines for you. And let's start. So first things first, what's the Elliott Wave Theory? Imagine the stock market, crypto or forex, whatever you are investing in or trading in, as an ocean with waves and of course ripples. These waves represent how prices move, driven by human emotions, which are greed and fear. These two emotions of ours are making all these markets, you know, fear and greed. So back in 1930, there was this genius guy called Ralph Nelson Elliott. We call him just Elliott. Notice that prices don't just move randomly. They follow specific patterns that he called them waves. And they repeat over time. Cool, right? And here's the heart of it, the idea of Mr. Elliott's theory. Imagine an uptrend. I will go into downtrend later in an example, but just imagine the uptrend. Whatever I say for an uptrend, you can have it exactly same for downtrend, just the other way. Okay, so there was a wave number one, he believed. There was, of course, its uptrend, and then a correction, which we call it wave number two, and then another rise that we call it wave number three, and another correction which is different, and but it's correction, it's like the second wave, it's a correction wave, but it's different, that we explain later, and then a last rising wave of number five. So if you want to say it was an uptrend like this is the whole wave, but how it moves really is this. And here you see greed, 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 and here you see fear, right? And here the balance of greed and fear was slightly to the fear, so some people sold and the price dropped. But here it was absolute greed, so it came here, and then here again fear and greed were in a balance. I will tell why I say balance. And here it's absolute greed, and this greed was leading you into a massive money and profit, but this greed can result in big loss. I tell you why, because of this. Then we go into the correction waves, which is a wave number, we call it A, B, and C. Okay, so let's give you some more details about these waves. First of all, these waves are not like what you see exactly in this drawing. For example, this wave number one, it can be something like this in reality. Okay, and this wave number two also can have corrections inside it. So it is a correction wave, it is a downtrend because the whole the main wave, the main trend is uptrend, but inside the correction you have a correction, a sub correction that is in the same direction as your main trend. Don't mix these things, understand the whole idea. Here we have the wave number one in the same direction of the big move, and here we have the correction, but inside the correction we may have other corrections. Actually, about the wave number three, It's the biggest wave. This is where you have to be in the market, in the position, and this should be definitely something like this. Okay, I will do something like this here, and I will explain it later. So this wave number 3 should be something like this, but even this wave and this wave and this wave can be complex, and they can have other pivots. You know, we call these points of returning pivot points, and we have minor pivots and major pivots. We have talked about them previously, and we will talk about them more and more. This is a minor pivot if you look at the big trend, and this is a minor pivot because it's higher than its previous ones, which is this one and this one, but it's lower than this one and this one. But this is a major pivot because no other highs and peaks are above it. So if I am at the point that both other pivots are below me or above me, then I'm a major pivot. But if other pivots before and after me are in different directions, so I'm a minor pivot. Okay, let's go back to the Elliott wave theory. So as we said, these waves can be like this, but there are more important things that I have to say. First, let's talk about the ratios. Ratios are very important because they help you understanding and predicting. Mr. Elliott was saying that the first wave is caused by market maker. So that's the smart guy, that's the smart money. They know from here, they know that the price of this asset or index, whatever, is going to this place, okay, to number 3. They start buying here, they do media press release here, and here other people like us will understand, oh, there is something happening about this asset or stock or whatever. Here some people will get into the market and buy from who? From the market maker, obviously, because he had bought them here. So he knows it is not going to stay here, but it sells some, so we buy, and then the correction starts. Some weak hands will sell during this correction, and some people that had the stock or asset previously before this point, they will say, oh my god, this is in their point of view, maybe this is here, so they are waiting for something like this, so they sell. We call them weak hands. And anyway, some smart people, including the smart money that created and initiated the move itself, will buy here, and they were aiming for the big profit like this. Obviously, during the wave number 3, they will sell and buy again. As I said, there will be corrections here. They will sell high, they will buy low. The thing is, if you have been to this, if you haven't been in this, and if you have bought during this, then you should just hold during the wave number 3 till the end of it. I will tell you how you can spot where is the end of wave number 3. And if you didn't sell here, every fluctuation inside this bigger correction is an opportunity to sell and save your profit. And this wave is for greedy people. I don't want to be among them. But if I hit here, I won't enter here. I won't enter. If I understand this is an number 1, 2, 3 Elliott wave, and this is the number 4, I won't buy here for this, because it's a very uncertain move, and it's just for greedy people. It's the herd, you know. And what I do, if I got stuck in the market here, I would know that there will be a double top at least. So if it's not like this, it will be at least something like this. So a double top will be the last station that you don't want this asset at all. There is a difference between these two corrections. the correction number 2 and the correction number 4, the wave number 2 and 4. Let's say correction number 1 and correction number 2, but the wave numbers, that wave counting is wave number 2 and wave number 4. There's a difference that the wave number 2 is smaller in time, shorter in time, it happens quicker. The wave number 4 is in a broader time period of time, and this is very obvious. It's something like this: lower lows and lower highs. You see both here, but this one is complex. This can be like an exact trading range, so you can draw a trading range on it, and this makes it complex. It is good for exiting. Every single pick you see is an opportunity to exit, and it's good to understand, oh, we are in number 4, we are in wave number 4. Maybe you haven't heard about this stock and you haven't been in the wave number 3 run, and you get noticed of this asset here. What you do, you don't buy, you just wait for the wave number 5 to happen and then you sell. This is how Elliott Wave also can help you if you have missed the major and main move. So this wave number 4 will be complex. It will be with many big shadows, shadows to up and down. There will be shadows here, and it's uncertain. People talk different things. Some people say, oh, it's going to 0, it's going to moon, and you have to know, okay, when there are too many different greed and fear balances, it's wave number 4. Here we have only fear, and here we have only greed. Okay, and let's go into ratios and then we are done. This wave number 1, let's say it's 1 unit, okay? It's 1 unit. This wave number 2 should be between 50% of wave number 1 up to 61.8%. What is this 61.8? It's a Fibonacci level. You have Fibonacci here. We will dive into Fibonacci deep and we will talk about it extensively, but just for now we have it like this: between 50% and 61.8% of this level. Maybe I have to, okay, we have to do it like this. Oh, sorry. Okay, so the green line you see is the 50% of this okay, the green line is 50%, the yellow line is 61 let's say 62%, and this low should be somewhere here. If it was here, you say, okay, this is not the wave number 1. If it was here, this is not wave number 1. You have to recount your waves, or maybe you have to just dismiss. It's not a Elliott wave. You have to go to bigger time frames or small time frames, but this is not a wave number 1, and this is not a correction wave number 2. It's a different thing. But if it stopped here and bounced from here, then you can enter. You can enter here, okay? Because definitely you know there will be a higher high, and that higher high will be somewhere here. So what is this ratio of this? This is 1.6 times bigger than this. So if you start here and this is 1, this should be 2.6. Don't forget, 160% more than this makes it 260% of this. Okay, so if this is 1, if it was 1 and it was 2, and if it's 1.5, you have to multiply 1.5 in 2.6, and this would be the price of the asset here. Is it exactly 2.6? No, it's not. It's roughly here. So you can again say between 150 up to 162, and when you reached here, you sell. You don't get greedy, you sell. And what if happened it came here? Don't worry, That was what you knew, that was what you were expecting. And this one is 20, okay, this, I have to show you the, let me make them here. I delete this 61 point and okay, 23.6. Just let's do it here and here and here and here. Okay, we have another level 23.6 and 38.2, and this wave number 4 should finish somewhere around these levels. Okay, so the correction is smaller than this one comparing to this and comparing to this. I mean, if you compare this rise to this rise, this is smaller, but maybe this is smaller than this. You understand what I say? It's all about ratios. So you have 20, 25, let's say, up to 38% correction of this wave number 3, and then you're done with wave number 4. And again, wave number 5 would be same price or slightly higher than the peak number 3. And the correction, this A low should be somewhere above the low of number 4, and low number C should be somewhere below the low of number 4, and the peak B, named B, should be below the major pivot, as we said. Okay, so I have said everything about Elliott waves. I believe not everything. There are much more you can and you have to read more. And Elliott wave is a big theory. You have to practice, and it never ends, you know. And I just said whatever you needed to know as a basics of this theory. And we will use these basics to understand the dynamics of the market. Whatever I said about Elliott waves is not enough for strategy based on Elliott waves, but it's good and enough for me as a divergence trader to know the dynamics of the market that I'm dealing with. And you have to start with clear trends to understand it. Go back testing on the history of the chart, or just watch the live chart, go into small time frames that move fast, or do replaying the bars. You can do replaying bars using TradingView if you have a premium subscription, or you can go to gocharting.com and use it for free, and start using back testing on replaying charts, or on the history of the chart. You don't need to back test. You can look at the chart, the history of the chart, and see moves. And I'm going to show you a very simple an example here. You can see these waves, and I draw a downtrend this time. You can see here we started the downtrend, we corrected then that downtrend around 50% that you see. If it was here, then it wouldn't be proper for wave number 3. And then we had this, the major rally down, the drop, sorry, no rally, drop. And you see itself was something like this, right? So if I take this out, you can see it's not very simple, you know. It's not a very simple drop, it's not a sharp drop, it's a complex wave itself. And then we have wave number 4 and wave number 5, and then the corrective waves on the upside. The only thing I don't like here in my own example is wave number 4 shouldn't be like this, honestly. But nothing is absolute, you know, in the markets. To me, it looks good, honestly. And but if you saw a correction that was very complex it is definitely wave number 4 in a Elliott wave. Okay, folks, so another point, use Fibonacci, practice Fibonacci. We will dive into Fibonacci deeper, and we will talk about it because we need it in many other strategies, and it's a very helpful trading tool. So Elliott waves often align with Fibonacci levels like 38.2%, 61.8%, and the Fibonacci levels are super helpful for confirming the waves. And as I said, practice, practice, practice. And here is the bonus tip that I promised. Don't get stressed about getting it perfect. As I showed you one example, Elliott waves are not an art, not a science. Start small, maybe on a demo account. It would be great. As I said, you can go back testing, you can go live on demo account and have fun learning, Then more you practice, better you'll get at spotting those waves. That's all for today, folks. And if you enjoyed this quick dive into Elliott waves, give this video thumbs up, please. Hit the subscribe button and share the video with friends that you know they are interested in the same content, and ring the bell so you don't miss more trading tips I put and I publish on YouTube. Drop a comment below and tell me, have you tried Elliott waves before, or if this is your first time hearing about them. I love to know. Until next time, keep learning, stay awesome, and see you.